One. Yay. All right. Oh my gosh, we're live. Hey, aloha, Love Tribe. Welcome to the Bitcoin Peace and Music Podcast. I'm your host, DJ Valerie B. Love, and I have a wonderful guest, James Lavish. Thanks so much for coming here, James. What's happening, my friend?
Thank you for having me. It's
Yeah,
good to be on a little bit of a chill channel for once.
the Chill Channel. I know. And so you're
There's so
you're
much doom and gloom.
oh my gosh, dude. Okay, well, so this is for everybody who's listening. You probably didn't get to see this first episode that James and I did a couple months ago, and then the podcast, the audio didn't, record well. So I was like, oh, we got to do a redo. So, welcome back, James, and thanks for taking time to come and chat with me and everybody about Bitcoin and the world and what the heck is happening. And let's let everybody know you're a reformed hedge fund manager. Like, let everybody know who you are and what's your scoop, so we can, get them on board.
Yeah. So, my background is I've been an institutional investor for almost 30 years.
Oh,
I
old.
know, it's so hard. And I started my first job was on the floor of the New York Stock Exchange. Long story short, I was an ice hockey player in college, and I was headed to the pros, or so I thought. I was drafted by the Boston Bruins, and we were working out a contract with them. And I senior year, as it turns out, and as it happens, I took one hit and blew out my knee, and that was it. So I had some debt, and I had to support myself. My parents weren't, wealthy, so we had to fend for ourselves. And so I went to New York, slept on friends' couches, and eventually wound my way onto Wall Street. And it kind of fit because, being in that fast-paced world of ice hockey, where you, yeah, elbows up, sharpen them as best you can, and yeah, and it's fast-paced. It's intense. There's a lot of pressure. You've got thousands of people watching you at every moment, and so it was comfortable for me to just jump right onto the stage of the New York Stock Exchange. And so I did something there that was kind of mathematically complicated. It's called ADR arbitrage, where you take foreign securities and you translate them into securities that can be traded on the floor of the stock exchange. You use the FX, the currency, and stamp tax. You put them in a basket, but there's a spread between Europe, where I was trading them, in the United States, or there was, and then came Excel spreadsheets. So, but at the time when I was there, we had nothing but a little calculator that was about 1/1000th of the power of this iPhone.
Oh my god.
And you just do it as fast as you can, and if you calculate it out properly, you got the trade. So that was my quick journey onto Wall Street, where I stayed for a long time, the last 28 years. And again, being in that world of mathematically challenging environment, and trying to do the things that other traders on Wall Street really didn't want to do, most of them, the derivatives and the options and swaps and the financing, all that stuff. That was easy for me to just parlay into what we call merger arbitrage, risk management. And that's where I kind of grew over the course of the next few decades. So, and that's kind of my background. So,
Okay, so you made the leap from elbows and all of this good stuff into the Bitcoin world. Like, how the heck did that, how did
elbows
Bitcoin come
up.
into your
Yeah.
elbow equation?
Yeah, exactly. Well, the pandemic it was challenging in a number of ways, that lockdown. And for me, it was challenging because my wife and I were living in two cities. We were going back and forth because we don't both have kids, and we were trying to decide what to do. And I knew it was coming. I had started hearing about it quickly on Wall Street. We were hearing about it in December, January. And then by February, it was like all the alarm bells were going off. And so I gave her one last hug and kiss goodbye at Dallas Love Airport. And it was one of the, it was just like that typical thing. We were going back and forth. We were, I don't know what the Southwest premium
frequent
thing is
flyer
yeah, frequent flyer,
extraordinaire.
whatever. We were as high as you can go on our own dime, just going back and forth. But and we did so often that this last time it was the first week of March. It was like maybe March 3rd. And so I drive up. She jumps out of the car, grabs her suitcase. She's like, "Okay, bye." And I was like, hold up, wait a minute. I don't know when I'm going to see you again. She's like, "Well, what do you mean?" I said, "Well, I mean, this is crazy. Like, I'm hearing about an idea of like shutting down flights or keeping people in cities, and I don't know what's going to happen." She's like, "Okay, whatever. You're a crazy conspiratorialist, whatever." And so she gave me a hug. She's like, "Go, bye, crazy." And then she took off. Not really, I mean, but and then I didn't see her for 100 days.
Wow.
We got locked down in separate cities. So I had my kids in Dallas. She had her kid here, and it was like, okay, 100 days into it, I just packed up my car and drove out from Dallas to Vegas. Never went back. And so, how did I get into Bitcoin? That was a long and winding explanation. But how did I get into Bitcoin? Well, I'm sitting here trying to figure out what to do because I've been in investments all my life, and I'm unwinding from this firm that I'm the chief operating officer in a hedge fund unit within a larger firm. And so I was trying to figure out what to do. And my son, who's in college, and they're into NFTs and crypto, and he's like, "Dad, I think you really ought to give this crypto another shot. You got to take another look at it." So what does that mean? All right, so let's back up and give you a little backstory. On Wall Street, as you well know, and many of your listeners and viewers know, institutional money managers don't really take Bitcoin seriously as a separate asset class, by and large, right? So go back to 2018, and I had some discretionary capital. I'm invested in equities and private equity and venture capital, real estate, your typical diversified portfolio for somebody who's in my position. And I had some extra capital that I wanted to do something a little bit different with. I wanted to go out on the risk curve with it, and so I'd been hearing about this Bitcoin thing. It ran up to $20,000. It came back down. We could hear about it here and there, but nobody took it seriously on Wall Street.
Yeah.
And so, and it had gone all the way up into the 20s and came all the way back down to about 3,500. I was like, there's something here. There is something here. I don't know what it is. So what do you do when you're on Wall Street? You go and ask the experts that on Wall Street, the technology and analysts, right? Because it's technology, you think, well, they're going to know. And by and large, every single one of them said, it's a Ponzi scheme. There's no underlying value. There's no fundamental value. It's just a lottery ticket, and you're just waiting to hope that more people come in and then you could sell it, and that's all. And so don't just avoid it. It's a waste of your time and money. And so I did. It's the worst trade that I never did in my life.
Dude.
And so I know, imagine, right? So
right, $3,500 Bitcoin. Oh.
And so I did. I missed it. And so and it's my fault. And I was ignorant. I was arrogant. I was in that world that had treated me so well for so many years. I thought, okay, well, these kids, they don't know what they're doing. I'm just
those kids.
I'm going to focus. Yeah, those
meddling kids.
Born for those meddling kids. And so that's what the Fed's doing right now.
Scooby-Doo, let's go.
Right. And so, yeah. And I've got these images in my mind now of Powell being unmasked by
Mystery Mobile.
Right. And so, anyway, so yeah, flash forward, my son said, you got to give this thing another shot. And so I did. I started digging into it, and we do this thing. Institutional investors do this all the time. They find something that they're interested in. They know there's something there. And so what they'll do is they'll buy a little bit, and then they'll start to research it. And it's called legging into a trade. You just buy a little bit, maybe a 0.5% position, and then you start researching it as you're buying more. And if you come to a spot in your research that you're like, oh, this is just not the risk reward, or it's not compelling the way I thought it might be, you just sell it, you get out, you walk away. I mean, no big deal. You took a shot, but the point of it is it forces you to do the research. So my mistake back in 2018 is I should have bought some, figured out how to do it, bought it, and then done some research on it. And then I would have gotten there pretty quickly, but I didn't. So flash forward to 2020, I finally do. And my son's like, you just give it a shot, check it out. So I bought some Ethereum, I bought some Cardano, and I was like, I started digging into it, and I quickly traded out of the Ethereum and sold in the Cardano and got everything into Bitcoin. I was like, okay, this is something I understand. The other, I just can't get a handle on. I get the whole gas there in the Ethereum and Web3, blah, whatever. But the Bitcoin as a separate asset class, I understand, I get it. And I'm going to devote my time to learning more about this. So I know enough about it. And I'm just going on and on about it. Just, please just interrupt me. Something.
No, this is awesome. Like, I want to hear, the reason why this is an important dive of like the before and after, especially from your perspective of, being on Wall Street for so long. I think obviously a lot of people are waking up with Fidelity and everything going on. It's kind of like, oh, this is not like, this isn't silly NFT monkeys pictures.
Yeah.
Like, this is legit.
Yeah.
stuff.
And yeah,
People need to
exactly.
pay
And you're
attention and wake
seeing,
up.
yeah, you wake up, you're seeing what's happening in the world. We'll go back to that. But basically what happens, I leg in, I start doing research. I realize that Bitcoin is where I want to be. So I focus on that alone. And I'm really focused on Bitcoin. And I'm listening to all of the podcasts. I'm watching podcasts. I'm reading the white paper. I'm reading blog posts and newsletters. I'm trying to figure it all out. And you come across the Michael Saylor stuff, and it's pretty powerful. It could be out there for somebody who's not used to that kind of talk about work is energy, Bitcoin is energy, but I was getting there. And then I had this epiphany. So I was watching a podcast Pomp was interviewing Jeff Booth. And Jeff Booth wrote this book, this incredible book, The Price of Tomorrow. And at the time, I didn't know who Jeff was. I didn't know the book. I knew nothing. All I knew was the Bitcoin Standard and a few other books. And so I had my laptop and I was watching this podcast. And my wife and I usually make dinner together. And she's in the kitchen. She's like, oh, come on, let's make dinner. It's almost 7:00. And I was like, hold on. And so I'm about 2/3 or 3/4 of the way into it. So I just stopped and I said, okay, you've got to come in here and listen to this. This is just nuts. She's like, what, and she's very intelligent. My wife she's a New York Times bestselling author. She is, I'm saying these things because when you're on FinTwit or you're a finance, professional, and you just on ad nauseum, eventually the people around you are like, stop talking about Bitcoin. So
I know.
So I've been talking about it, and I'm like, this Bitcoin is like really, like, I'm showing her Michael Saylor. She's like, yeah, and okay, and then I pull her into the bedroom. I'm sitting on the edge of my bed, and I've got my laptop. I'm like, look at this, and I rewound it, and we watched the whole thing on the edge of the bed. Watched the whole thing straight through, and at the end of it, she looked at me. She's like, how much do we own? Is it enough?
Yeah.
So what happened was, and really, truly what happened was I finally understood. And Jeff was talking about this ongoing battle between the deflationary forces of technology and all of our work that should be, that our work should be becoming more and more valuable as the future rolls on because of the deflationary forces of technology. However, we have these inflationary forces of our faulty monetary policy, and they're fighting against each other. And the two of them they're coming at odds, and they're eventually going to clash. They're going to crash into each other. and we're kind of seeing it in real time now, this happening. And so, but it went off. I was like, I get it. I get it. And I understand it so well now. I want to just keep researching it and keep talking to people and keep understanding and start helping people understand it, especially in my world, in the world of institutional finance, because there's a bridge there. There's a huge gap where they still consider this a risk on asset. They don't understand the difference between the asset itself and its properties versus it being some meme on Bloomberg and CNBC that they call it a token, and they're like, and that's just so, I know what it means, but it's just so demeaning. Oh, this token is down 20% today, and that's what they're all seeing, and they're brainwashed with this. And why? Because they're in a system that has operated so well for them for so many years that they just don't understand it. They don't grasp it. They don't get how it's different. They don't understand immutable properties. They don't understand scarcity. They've never understood. It has never been scarcity.
Right.
Even gold is so it's completely manipulated by the paper market. Conceptually they can get it, but it's never played out perfectly because there's never been something perfectly scarce. Now, of course, you have the derivative market, and that's now been overlaid on Bitcoin. We've seen the problem with that. But if you hold Bitcoin itself, there's something that is there. There's a trustless, immutable, scarce value to that is, there's just nothing that can compete with it. So, and I knew this, and I thought, okay, so I want to dive into this world. I want to start meeting people, talking to people, and understanding it, and start helping people myself. And that's really what happened. I mean, it's just about a year ago, I got onto Twitter and I started talking to people, and I got pulled up onto some Twitter stages and gave them my perspective and understanding from the institutional investing world. And it's been a little bit of a whirlwind this last year, and so I've ended up being one of these people who is helping educate others. And I think honestly, one of my gifts, Valerie, is to take complicated concepts and simplify them for anybody to understand. And so whether it's yield curve control, or whether it's a CDS market, or whether it's the Fed put, or any of the repo market, any of these concepts, I like to empower people with that knowledge, because it's so opaque, my world. And it's like that for a reason. I don't think that there's this great conspiracy to keep it opaque. And thank you. That's my newsletter, right? So I don't think there's this great conspiracy to keep it opaque. There's no incentive to let people in. If I'm a money manager and I have this knowledge set and these words and these acronyms that I understand so well, and that you have no idea what they mean, you're going to hire me because you don't want to deal with it. But I'm not trying to help people just take control of all their finances, because that's not the point. The point is to really understand what's going on, and then to push your financial advisor to, into questions that they have to answer intelligently, because you understand what's going on. That's the point. And so I'm looking to empower people in that. And that was the whole point of that informationist newsletter. And, I just started out as something that would teach people something each week. And it's grown quite a bit. People love it. I've got over 7,200 subscribers now. And, it comes out every single Sunday. And it's just something that it simplifies a financial concept for you. I try to keep it on point to what the discussion of that week or the last few weeks has been. So people that's what's on their mind, and it gives them a little bit of ammo, to approach subjects. It gives them some meat to talk about when they do meet somebody that they want to discuss these things about, or if they want to talk about on Twitter. Or if they want to go home and look at their portfolio and have a good heart-to-heart with their investment advisor. Why do you have me in 40% bonds? That's a good question. If you're not asking that question, then you haven't been paying attention. And it's not your fault typically, because it's not out there for you to, it's not readily available for the every man and every woman to be able to see exactly what's going on in the world of finance, and how these massive decisions by the Fed and the ECB and the Japanese government and the Bank of Japan, how these things are affecting the people. You need to understand it. And that's the point of it. And it all, of course, leads to Bitcoin. In the end, it all leads to Bitcoin.
It all leads to Bitcoin. And okay, so congrats on rocking it over the last year, because that's amazing. And I've been following you, and I'm one of those people who are like, I'm not a financial expert. I'm not an investor. I'm not any of this. I'm just ordinary Val, right? But
that's good.
I know that this is super important information that we all, have given over to we've given the responsibility over to other people who we think are smarter than us, and unfortunately for a lot of folks, it's kind of shot us in the foot, because we're not taught financial literacy in school. We're not really taught correct economics in school,
right.
And so we've been buying into the old narrative, and we're like, well, okay, I guess so. And these guys are smarter and they're richer, so I'm going to listen to them. And it's like, like your guys on Wall Street, when you went and asked them about Bitcoin originally, like, right, you took their word, and then you just kind of, and you're of that caliber. And it's still like, how much mental bandwidth do we all have individually to go into all of these rabbit holes, and try to attempt to understand what is money.
You don't.
And so we outsource it to other folks. And how do we know
you outsource
the right folks?
Because, and you know that the information's out there. It's all over the internet. But you pull up an article, and it's kind of it's convoluted, and it's difficult to understand, because there's always more acronyms in there. There's always more terms in there. And so if I talk about yield curve control, you have to understand every single thing that leads up to the point where a government would want to buy its own bonds. But there's a lot to understand there, and it's not that complicated. It's just, if you're going to teach it properly to people who don't have a financial background, well, then you need to explain it along the way. But I also try to write it in a way that is good for professionals, especially for people who are in family offices or who are registered investment advisors who are not macro experts, but have the gist, but just need a few more pieces to put it all together. And then great. So you've got the looking glass up there. So this is the thing that Greg Foss had invited me to help out on. And we're kind of we're the elders on this thing. We're kind of the advisors, but there's a few people who are really in charge of this, Seb Bunny and Daz Bia and Dahlia Platt. And they're really the ones who are doing the hard work. And of course there's Max down there who's doing the multimedia stuff. And so, but we're on there, Jason and Greg and I. Jason's a doctor from Wisconsin. He's actually a surgeon, and he's incredibly smart. And he's just doing this because he knows there are people like in his position who are very smart, who have just not been taught about money. And they don't have time to go learn it all themselves, but they actually do have a little bit of money and they want to protect it. Well, how do you do that? So he's a bridge to that world. And so it's been fantastic. And this whole platform is meant to, it's kind of like a course where you can do it at your own pace. You just sign up and you start doing each chapter or each module as you go through. And it's so what's wonderful about it is that you can pause at any point, you can go back, but none of it is to say, this is why Bitcoin's the bad, like that's not the point. The point is to say, here's how here's where like where money came from, how it works, here are the problems, here's what needs to be solved. And then here's what Bitcoin does. And here's why Bitcoin will eventually be the ultimate currency. And that's the point of the whole project. And we happen to be extraordinarily fortunate here in America. We have the
Mhm.
dollar, and
Yep.
we're watching the dollar just swallow every other currency out there. The dollar today is up again. If you look at the DXY, and the point is that um, we're extraordinarily fortunate today. No, not forever, but today. But there are people out there in we're watching it in real time in Lebanon. Uh, we're watching it in Venezuela, in Argentina, that either they don't have access to their money, or their money is hyperinflating, and they need something. If they want to leave the country, they can't get access to their banks. They can't get access to the capital. Well, if you have Bitcoin, you have access to it anywhere in the world. All you have to do is memorize your 12 to 24 word seed phrase, and you can access it anywhere. It's not in that nation that you're living in, it's in the cloud. And so the cloud, you understand what I mean by that. It's not the cloud, it's on the nodes.
Mhm.
Um, but the point is that you can access it anywhere you have an internet connection and a cell phone. So um, this project is incredibly important for the world,
Yep.
not for investors, not for doctors, but for the world. It's incredibly important for anybody who is in a situation of sovereign distress, of currency distress, or that could be in the near future, any emerging market. So and that's why this has been translated into, I can't even remember how many languages now, but uh, it's growing every day. But it's a great platform. I encourage people to share it with others, especially if you have friends overseas in emerging markets, in South America, in Central America, in Africa and Asia. If you have friends, share it. So it's a great platform, and I can't take credit for it. My newsletter's up there. I help shape the program from way afar. The the guys on the ground, boots on the ground, are the ones that deserve all the credit. Those guys are awesome, and they're brilliant.
Yeah, it's the brilliance and the generosity and the care that people have in this community that I've, been blessed to experience over the last year. It's staggering. It's
It's staggering.
absolutely staggering to me. The people that I've gotten to meet, like you and Greg and Seb. I'm going to be talking with him tomorrow.
Oh,
Um,
good. Yeah, you can
it,
talk about more about this. He's got this.
It's
Yeah,
just
it's
it's
his.
incredible though that like people just are like, I just want to come and volunteer my time. I just want to do this. I mean, I do this podcast. I don't make money at it. I just do it because I want to get the
Mhm.
word of Bitcoin out there and love and peace and hope for humanity,
I thought it was an excuse to wear the glasses.
It's such I mean, dude, come on. These are great, right?
I like them.
But like people are so generous and so intelligent and thoughtful. And I'm like, wow, it's like it just it blows my mind, every
Mhm.
day on a day-to-day basis. I'm like,
Yeah.
wow, wow, wow. And it blows my mind too, thinking of like what else because what else do I not know about, because I've learned this thing called Bitcoin and now I've learned what money actually is and how it works. I think of like, well, what else has been out there that's been kind of pulled over my eyes in the system,
Mhm.
and whether it's health, whether it's energy, whether it's any
Food.
food, exactly. And so it causes you to really pull back and not just take everything at
Mhm.
face value, and take that extra time and do our research. Let's talk about let's talk about energy. I want to talk, and I know right before we hit live, you're like, I'm not an energy expert, but I think you obviously understand a lot more than most of us do, and I think
Mm.
so many of us, again, we've been duped into the like everything's got to be green and everything's this and turn off all the coal and gas and
Mm.
let's just make solar panels. Like I was
Right.
looking at somebody's, I think uh, so somebody's doing like this Bitcoin Citadel, and they were showing like how many how much energy it costs to just clean solar panels and to make things go because they're in a dusty spot. And I was
Mhm.
just like, oh, I never even thought about like what kind of energy goes into simply cleaning the panels, let alone getting all of the ingredients that go into
Mhm.
the production and how long they last, et cetera. So, can you speak a little bit about, you know, energy policy and how it's going to,
Yeah.
what's going to happen in Europe and what do we think is going to, how can people take care of themselves and get educated?
Yeah. So, the most important thing to think about in Europe is that they put themselves on this themselves on the standard that I don't know exactly how they're going to emerge from this. Europe decided that they were going to go so green that they're going to shut down all their nuclear plants. That, well, not France, but Germany. Let's talk about, because they're the
Mhm.
leader, right? And they're going to shut down all their nuclear plants, and they're going to just, in the meantime, buy natural gas from Russia. And we've seen the problem there. They're energy dependent, where they could be independent. I mean, this is Germany we're talking about, that known for the best engineering in the world.
Yep.
If anybody in the world ought to have nuclear power, it's Germany. And they're working on shutting down all of their reactors. They've got 3 left. They've put forth some sort of referendum that says that they're going to stay online. But we've seen the energy prices with the crisis, and with Russia refusing to sell energy in dollars, and then obviously the EU with their sanctions and not having an agreement to get natural gas. Russia's shutting down pipelines. It's just they don't have control. They've lost control of their energy, and so you're watching prices rise, and we've seen receipts, people there, or invoices for their energy, and these little mom and pop shops, yeah, who might be paying 80 euros a month for energy, all of a sudden they're paying 800.
Yeah.
I mean, you hear the figure, oh, it's up 1,000%. Oh, that must be a lot. No, 800 euros a month,
Yeah. That's insane.
8,000 euros a month. So if you're this coffee shop, you're normally running 800 euros a month. Now you're at 8,000 a month. I mean, like, that's devastating. And so you're seeing these places close down. And so, um, I think it's apparent that there's, look, again, I'm not an energy expert, but one of the things what really irks me, what really upsets me, is when the establishment, it shames people when they use energy.
Yeah.
We're living human beings. There's no way around the fact that we're going to use energy if we're going to live. And unless you lock us down in our houses for years and then put some sort of breakers on our energy inputs to our houses, we're going to use energy, and there's nothing wrong with that.
No.
There's
Yeah,
nothing wrong with it.
I think it's such a misconception for so many people. It's like energy's bad. I'm like, we're here in this more advanced society because of energy. It's like when we can put our minds to work and create better energy, and obviously nuclear is the best we have right now for the green movement. But you said something I want to touch on. Oh, they could put something on your breakers and have you not use as much energy.
Mhm.
Or they can create these little things called CBDCs, and they could monitor how much energy you're consuming, because
Exactly.
now you have to buy your energy from the grid with the CBDCs. And then if you have too many, if you ate too many hamburgers or whatever is going on with your
Yeah.
carbon
Well, they're
footprint,
all the
now
way going. They're going way down the path on that in China already,
it's a
right?
nightmare. And
It's a
so
nightmare. Yeah,
people
exactly. So
need
they're going
to
to say,
understand this.
yeah, yeah. CBDC is just an excuse for them to have total control over your money. So if you have money in the bank and you go to try to spend it, and if the only thing that the merchants accept is CBDCs, then if your social meter is over the energy line, then they're going to say, no, your carbon footprint is too high this month, so you cannot buy this plane ticket.
Yep.
Or you
Yeah.
cannot buy that steak, or you cannot, and that's, I mean, it's just unconscionable. But that's what they want to do. It's just total control. They want to control. They want total control, and it's evil. And so people need to wake up. They need to understand that there has to be another way. There has to be an alternative to CBDCs, and obviously Bitcoin is that alternative for us. So, and that's what we need people to understand. And the second thing they need to understand is that this system is in a state of disrepair. If you look at the United States, who's again, Greg's funny because he kills me. He calls it the best house on a crack street, crack house street. But maybe it's the cleanest shirt in the pile of dirty laundry, maybe. And so but the problem is we are over indebted. Every country is.
Mm-hmm.
And so now we're staring down this issue, and we're watching the Fed walk this tight line, this tightrope, right? And so the problem is we have so much debt that we cannot overcome it with our tax receipts.
Yeah.
And we're heading into a recession here. As you raise rates, you lower GDP, and you lower your income. Yet at the same time, because we're indebted, we're raising our cost of interest annually, and so it's not matching up. If you go to the debt clock, you can see how GDP is going down, and how the debt is going up. You can just see it happening real time.
Yeah.
Now the tax receipts are a little bit funny because we're still waiting on 2021 tax receipts, and for people who have deferred all the way to October. So they're not perfect alignment, but you're going to see that those tax receipts are going to be down severely this year because of 2022, because of capital gains taxes are going to be way down because the stock market is way down. And so but if you just look at it and you realize that we have almost $31 trillion of debt, right? So I wrote this piece called The Debt Spiral, and it's on my Substack. It's pinned in my Twitter profile if anybody's interested. It's really simple. But the point is, we have $30 trillion worth of debt. Well, back then, when I wrote the piece a month ago, it was $30.3 trillion of debt. So I rounded it down to 30 trillion just to make it simple. Well, now we're at 30.9 trillion. I mean, this is a month later, 1 month. Okay. So we had some extra entitlements in there. We decided to write off $300 billion of student debt. And, we just continue to do these stupid things. But, so the problem is you have all that debt as you're raising rates, and 30% of it comes due in the next 12 to 18, over 30% in the next 12 to 18 months. Over half it is due in the next 3 years. You have to refinance that debt. And now we're going to refinance it at higher rates. As we're losing tax revenues going into a recession, so now you see the Fed up there walking this tightrope of, we've got to raise these rates really fast, crush demand, but not crush the economy, because we can't destroy tax receipts. We can't go into a depression. Why? Because we have so much debt. So everybody's talking about Volcker, and I wrote a piece on there. You can see in my piece last week, or the week before, was on Volcker. And Powell is up there talking about Volcker ad nauseum the last two meetings. He just keeps saying Volcker, and we're gonna attack inflation. We're going to control it. Well, the problem is, Volcker got it wrong a few times. You can see it because They raise rates, they lower rates, they raise rates. It took them 3 years to figure it out. But the issue is they can't raise rates and sit on them for years, because we'll have to refinance all that debt. And our interest expense will go from $400 billion a year to over $1 trillion. And so then you want to talk about a debt spiral that accelerates, because you can't make that up, except for how you can make it up by paying down this debt that you're creating today with future dollars that are cheaper through inflation. And that's their plan. Their plan is to pay it down with inflation. So they keep talking about how they're going to get inflation down to 2%. Inflation is not coming down to 2%. If it does, that's a CPI number that they've manipulated to look like that. It's smoke and mirrors, but the real inflation rate is going to be more like 4 or 5%. And they're going to live with it because they need to pay down this debt. They have to. And we're just going to continue to do this. But he's walking that tightrope. You can see it. Raise rates really quickly, crush demand, don't crush the economy, pause, sit back for a little bit, then next year, hopefully reverse, bring the rates down, and then we're off to the races again. But if they crush the market, they're going to have to come in with QE and infinity, because they can't if they absolutely crush the economy, they're going to have to help out again, like they did back in March of 2020, because they're painted into a corner. This is just simple math. This is not voodoo magic. This is not like, oh, this is a play on Bitcoin. No, this is just the math of where the federal debt is right now. And here's the crazy thing, is that we're not even the worst. There are some that are out there that are even worse. Watch what's going on in Europe right now. And their issue now is that they've got Italy and Greece that they're trying to support. Their 10-year bonds are, they keep creeping up to 4%. So they have to do what they've called fragmentation tools. And I can't even remember what the latest stupid term they put on it, but what they're doing is they're basically doing yield curve control on the debt that's in different countries, but they're using Germany's balance sheet and the northern countries' balance sheet to do it. And how long is that going to keep up? Like, how long are these countries going to put up with this? That's the question. And it's only going to go until the euro eventually breaks. But this is happening around the world. It's happening in real time. We're watching it, and it is scary. I don't know when that happens. I'm not going to predict it, because everybody's always wrong when they say, "Oh, it's going to happen next month." It's not going to happen next month. But when it happens, it's going to happen fast, and you better be prepared. You either better own CDSs on sovereign debt in Europe. Which, how can you do that if you're an individual? You can't. You can't buy CDSs. You can't do that, but you can buy hard monies. And I don't propose that people go into 100% Bitcoin. It's just not the way I am. I'm a risk manager. Nothing is 100% sure. Mm-hmm. Do I have confidence? Yes. Am I 100% sure? No. Am I 100% sure that gold is going to come out of this and double, triple, quadruple? No. Am I confident? Yes, I am. So I think you should have have your money in some hard assets if you can, and diversify. But beware, because we're going to be in a period of pain here for a while. And so if you're going to add to it, like if you're in America or you're in Canada, having some cash on the sidelines is okay. It's not, if you're in the UK, there's going to be contagion from Europe fallout, but that's not going to happen tomorrow. But in the meantime, while we're staring down the Fed raising rates and risk assets coming out of favor, continuing to come out of favor, excuse me, then that there's still some pain that there's going to be felt in the market. So find assets that you have sincere, real, high conviction in, high quality securities and hard monies, and then just add to them opportunistically as they come in. But I would never suggest everybody go all in on anything. That's just not how I would do it personally. And it's not how I do it.
Yeah.
So.
Well,
wow, that was it. That was a long monologue. Sorry.
That was a good one. Take a breath, James. Bravo.
Good grief, dude.
Well, I think about again, what's going on in Europe and with the energy that's going to happen and what's happening here. And we're obviously a little bit more shielded for the moment, it sounds like. But if people stop paying their bills, or if they have to shut their business down and the government wants to come in or the banks come in and say, well, we'll help you and we're going to print some more money to help you. It's like, it just doesn't seem like it's an escapable situation over there. And are we ever going to get out too, unless we get energy independence and food independence, which that's a whole nother topic. But like, if we keep giving more money to the wars that are going on, and here's some billions and more billions, it's like we're just adding to this debt, it sounds like. So it's like, are we going to prepare for the doomsday thing that happens in a couple of years and all the currencies collapse and we get Bitcoin? Or, I mean, I don't see any
I don't know.
bank ever going,
No,
we're going to,
we're a ways off. I mean, I do not see the US dollar collapsing. I see the US dollar remaining. I do see the US Treasury coming out of, the US Treasury has been the global reserve asset forever. I do see that being unseated. There's going to be, numerous. I don't know exactly what it's going to look like. I don't pretend to, but the U.S. dollar, I believe, will remain, along with some sort of BRICS, version of it. When Russia and China and India and Brazil, when they get together, South Africa, then there will be a different currency. And what that looks like, I think it's just going to be multiple reserve currencies, right? But I don't. I'm of course I'm not hoping it. I think if you hear a lot of people in our space here cheering for hyper Bitcoinization, and I don't think they've really thought through exactly what that would look like. I mean, the lawlessness that would cause. There would be so much damage to just our social structure here.
Yeah.
There's a better way, and that way is to have Bitcoin being accumulated by these sovereigns alongside the currencies that they were using, and eventually becoming one of the reserve assets of the world, and so they can operate concurrently. But to have Bitcoin just take over the world in one fell swoop, yeah, you'd have some insanely rich people who have bought Bitcoin already, but it would be painful for the rest of the world. That's not what we want. We'd rather get everybody on it quickly. Have people on Lightning. If you talk to Jeff now, he's a good friend of mine now, Jeff Booth, meeting him through this space. He and other people, what they're trying to do is they're trying to get Bitcoin wallets and Lightning wallets to 1 billion people worldwide. So they have this option because they need it. We don't need it yet, not yet. It's good to have as insurance. It's good to have as, a hard money asset. But the people who really need it, the hard part is getting it to them. So, and that's the challenge, and that's what we're doing.
Yeah, and look at all the geniuses behind the challenge that are tackling it with like, yes, we can do this. We are doing this. It's happening. And you're right. I feel like, we're okay for a minute, but it's just like, when you were kissing your wife goodbye at the airport, like you think like, oh, we've never had a global lockdown ever in our lifetime, and
Right.
because we haven't seen it, we don't have the perspective of this is possible. It's just one of those kind of concepts out there, but like
It's just so intangible. Yeah.
Exactly. And you don't have, you don't have a reference point. And the same thing for what's happening now. It's like we've never had a Bitcoin to look at for the future with our world, and now we do. So it's like, wow, what is the hope and possibility that is there for humanity in the long term, and
yeah, exactly.
it's magic. I love it. And okay, so I don't want to keep you too long.
No, it's okay.
Did you know that it's pleb minor month?
Oh, cool. No, I did not.
Yeah, so
Excellent.
pleb minor month, and, and this has to do with energy, obviously, like, um, there's a bunch of different pleb minors and guys out there and women who are helping educate people about if they want to do home mining and heat their home with their ASICs, and maybe they
Awesome.
want to do something with their pool or whatever. So just how to learn a little bit more about mining and, kind of circling back to the energy and the FUD and all the things that are getting, circulated out there, especially since the ETH thing, ETH merged last week. Like, oh, Greenpeace is putting $1 million out there to say how bad Bitcoin is for the world. And it's just like,
Relentless.
always follow the money. Who's funding these campaigns? Who's funding
Yeah.
Greenpeace? And I think it's very important for people out there to do lots and lots of research about the energy and the positive possibilities for what Bitcoin mining can look like for, uh, stabilizing grids, heating your homes, heating your sauna and your hot tubs and whatever, that you're already going to spend all this energy on. Like, you know, why not heat it with the ASICs and then make, at least
That's
your
right.
energy go to work. So it's
Yeah, we're
cool.
working on a project. I've got some investors that we're working on a project to heat greenhouses up in Alberta off of some energy that we're getting collected gas around a lake, and so there's so many opportunities. There's so
So
many
many
ways to use it. Yeah.
opportunities,
So
and like I know down in Guatemala, they're doing, they're taking the waste gases from like human waste and landfills and stuff,
mhm.
and they're trying to, convert that into usable energy for powering some miners. So it's like all the creativity of all the engineers and the tinkerers and the hackers.
Mhm.
Like, yeah, it's getting used for good. I mean, think about just if you think about like the clothes dryers, right? Like if every
Mhm.
laundromat in the world had some ASICs plopped there. Like I was talking with Rob from Upstream Data. I'm like, dude, why don't we put something together where we can help all of the laundromats turn into, like, let's get them heated from the heat from the ASICs, and uh, why not have some little Bitcoin education while people are sitting there waiting for their clothes to dry at the laundromat?
That's a good. Now there's synergy right there.
Exactly. And that I'm, as a DJ, I take all these different things and I connect them and then I make something bigger, and cool. And
Brilliant.
I love doing that. And you think about like people who have to leave their house to go do their laundry are at a different
Mhm.
economic scale, than most if you don't have a dryer in your house. And so why not help empower that whole community and help teach them about money? So, hey, what's up, Looking Glass? Let's bring up some education at the laundromats, right? So
Yeah.
let's talk about that. And maybe,
I like it. I
um,
like it.
and then the other thing too, we had talked, it's the Pleb Minor month. We were like, why not get something with the kids and do like kids Bitcoiner month? And I know
Mhm.
I'd said something with you guys. And so it's like, raising a kid at the school, the teachers are always looking for cool projects. And it's like, you've got physics, you've got finance, you've got fundraising, you've got all these things that, you've got heating, you've got all these things that you could put into a package with Looking Glass and with all of these other folks. And it's like running a node, all the different things of programming and understand stuff. So I'm like, why don't we create something that we can just help expand this into all of these schools in a really cool, meaningful way? And so, yeah, so that's so
I
that'll
like
be
it.
like rocking and rolling. So I'm
Yeah,
excited
that's good. I like
to
it.
see
I
what we
like
can
it. I
do.
like it. Yeah. I'm interested to see what Seb has to say. Yeah,
I
definitely.
know, me too. I'm so excited
Yeah.
to connect with him, and we'll see what happens. It's slow but sure, and that's what we've got to do. We got to one breath at a time, James. One breath at a
That's
time.
right. One breath at a time. That's right. That's right.
Any
Awesome.
final words for the wonderful listeners out here
No, just
about?
hang in there. Yeah, just hang in there. And, yeah, we're in a tough period. We're in a really hard. And if you think that money managers have this figured out, they don't. They're lost. It's very difficult right now for anybody trying to make a return. And so protect your assets. Stay on your toes. Don't get over levered. Don't go out there and buy Bitcoin on leverage with Bitcoin. That's suicide. Don't do it. Um, and be ready for just a rocky patch here for a little while. And then once we get through this, I think we're Bitcoin is going to be one of the assets that performs very well. and eventually, when the institutions understand it broadly and deeply, it's going to go into a completely different asset class. So, but in the meantime, just as I think as the Navy SEALs say, or maybe it's the Marines, I don't know, but one of them, they say, just stay groovy.
Stay groovy.
Yeah, when you're in the middle of a firefight, just stay groovy.
Dude, I say stay groovy. I'm not a Navy SEAL or a Marine. Rock and roll.
Just stay groovy.
Okay, so really quick, we'll close out with this one thing. We had texted each other a while back, and you said you got to be was it backstage at Duran Duran?
Yeah, I got to be. That's right. So my sister is she's in the media world, and she does a lot of the marketing, and she's a creative director for a firm. So, and one of her friends is he's in production, and so he knew the producer of Duran Duran, and so
Wow.
they hooked us up and they put us in the sound booth here. It was fun. Yeah, Duran Duran. I mean,
Her name is Rio.
so she yes, it was her favorite band growing up, and she's like, my husband's out of town, will you come with me? I was like, of course. I remember her dancing to Rio in her room with her cut out
Simon Le Bon, baby, let's go.
she had the posters. She did. It was funny. It was good, man.
That's
Talk
awesome.
about being transported back to the 80s.
Dude, I know, right? Blast, like music, it's so powerful. Like we just, as soon as you hear a song, whether it's like a big heavy jam or if it's something soft and sweet or whatever, it's like,
Yep.
it just instantly takes you there. It's so magical. I love music, obviously.
It is. Obviously.
Yay.
It's good.
Well,
Listen to music, stay groovy, and just listen to more music.
Yeah, exactly. Stay groovy, my friends. That's a good motto. Well, thank you again so much for doing this again with me. I love talking with you, and thanks for sharing all your genius with everybody and the informationist, and you guys definitely go follow James. Go to jameslavish.substack.com and follow James over at James Lavish on Twitter, and make sure you subscribe to everything he does, because your brain will be happy. Right on,
Well, I
my
appreciate
friend.
it. You're a welcome bright spot today in this world. So
thank you. Yeah, you too.
I appreciate you having me on, and always appreciate talking to you, Valerie.
Yeah, definitely. All right, I'm so excited, and I'm excited to see you. You're going to be in LA, right?
For Swan, yeah.
Yeah, totally. Okay, I will come and say hello in person. That'd be awesome.
Definitely.
Yay. All right, everybody. Peace, love, and aloha. Have a wonderful day. Until next time, this is DJ Valerie B. Love and James Lavish with Bitcoin Peace and Music. Aloha. Yay.